Good morning, everybody. Welcome to today's morning coffee with Mike. Today, we are talking about understanding markets, understanding trades, and the beliefs that actually will produce results. The reason why we're talking about this is because the market has been all over the place. As you guys know, there's all sorts of shenanigans going on in the financial sector. And so we've been dealing with this whipsaw environment, a bear market, for really more than a year now. This started in November of 2021, and we've seen the market roll over and come back and roll over and get real choppy over the last uh, year and a half now, which is kind of crazy to think about, right? If you weren't trading back in 07, 08, this is the first real bear market that you're experiencing. So, uh, I wanted to talk about how we can better understand markets, trades, and the beliefs that will ultimately get us results. That it's one of the things that I talk about in the book, and I started to read about and think about some of the things that uh, I had experienced early on, particularly in '99 and 2002 dot-com bubble, and then later on as well. And one of the things that I began to experience was this idea of constantly following the news and understanding the story of the day. So let's dig into that a little bit. And if you're following along too, if you've let me know too if you've been trading since 2000, since 1999, since 2000. If you were part of the 2007, 2008, type that into the chat. Let me know. If you're a newer trader, type that into the chat too. I want to hear where you guys are at in your trading journeys. Let's see. Yeah, you guys over here on Instagram, tell me. You guys over here on YouTube, Twitter, Facebook, LinkedIn, you guys pop it into the chat too. And yeah, on Twitter, just comment down below, and I am monitoring that too. We've got a bunch of people watching over on all of the place. Got a few beginners here. Okay, so you're newer to the game. That's great. So here's what I used to think when I was first starting out too. That we needed to closely follow the news of the day, right? Mm, someone had pointed out that there was something that came from Deutsche Bank earlier today that where they were getting into some trouble, down 15% markets in Europe. How is that going to affect the current market environment here in the U.S.? Right? It's a fair question. It's a good thing to think about, right? Well, there's a few different ways to unpack this, particularly if you are a retail investor, right? That's what they call us, right? The individual person that has your broker, you have some money, you put it in, and you're going to try to trade this yourself. Well, we're not the institutions. When most of us here aren't the hedge fund managers or managing money for other people. If you are, fantastic, and this can help you guys too. Um, the idea is that there is the market, right? So the market, the trade, and the beliefs around it. So here's what I mean. If we were to go ahead and buy something, right? We're going to go to the store. We're going to buy something, and let's say that it's a new car, right? Let's say that we're going to go buy a Ferrari. We're going to go buy that Lambo with all those big profits that we had in Bitcoin and from all the stocks in 2020. So we go in. We could go to the showroom. The showroom's gleaming. It looks nice. We get greeted by a well-dressed salesperson, and they walk us around, and we spend some time thinking about getting that new car. Great. Now let's think about that same car, but in a different environment. Let's say that car isn't being sold from the showroom, but let's say that it's in a lot around the corner, right? And you go to that lot. There's some stray cats walking around, maybe an overturned dumpster, and guy in a plaid suit comes over and says, "Hey, you want to buy this car? I'll give it for you to half off." Right? Very different environment, and so your mindset shifts automatically. How the hell does that apply to trading? Well, it applies to trading by looking at the overall landscape that you are taking a trade in and the quality of that trade. That they kind of go hand in hand, right? So if you're buying your same setup right now in this market environment, it's different than buying the same setup that you did back in 2020. So does that mean that we need to be paying close attention to the news, like Deutsche coming out and doing this or that? Well, there's a couple of different ways to look at that too. One of the ways that I found to be very helpful in being a retail person that's not going to be able to stay on top of the news all the time. And then what news do you really pay attention to? One of the best ways in the a mindset shift is that we don't need to necessarily follow the news. We just need to follow the reaction to the news. It's the actions that people actually take. Well, how can we monitor the actions that people actually take? So if all this news out here, if all these different things are important, then the major players of the world, the ones that are actually moving markets that are pushing around billions of dollars, how are they going to take this news? Right? How are they going to assess what's important? Well, they're going to put their dollars to work, right? So if we could monitor their actions by watching how they're moving money around, we could do that by watching the price and the volume action in the market and see, well, how are things moving? How are things setting up? And so from there, we could start to figure out, well, what are the major players of the world doing? And we can follow along with them. And also understanding that they cannot move in and out of the market as quickly as we can. If you're pushing around billions of dollars, you can't just enter 1 minute and exit the next. You and I, we're able to enter right now, exit again, enter again, exit again, and we could day trade. Well, we could scalp. Well, we can swing trade. We have the ability to enter the market and exit the market in a flash. So if we can look at the bigger picture, then we could start to see, well, how should we be behaving? And we could come up with systems and strategies in order to do that well. What I like to do is to follow a methodology that, or there's so many different methodologies, right? And the important thing about figuring out, well, which methodology should you follow is to read up on a bunch of them and see, like, well, what fits your goals, well, what aligns with your beliefs, and what are you going to be able to execute? And one of the great things about the what are you able to execute part is that you could customize a lot of this stuff, right? If you're following along, type into the chat, let me know. One of the great things about being able to the execute part is that, well, when I first learned about the methodology that I started customizing, right? So I first learned about William O'Neill's strategy that he outlined in How to Make Money in Stocks. He calls it CAN SLIM, and it's an acronym for how he saw markets actually move and what caused the stock to go up. Basically, extraordinary earnings and sales, and having the market environment, having some kind of leadership qualities, having the institutional sponsorship, because, like we mentioned a couple of moments ago, that it's really the big institutions of the world that are pushing around all the money and causing things to go up. So he found all those things. Then I started learning more from guys like Mark Minervini, Nicholas Starvis, Jesse Livermore, and a whole host of others. And then that's where I started to figure out how can I customize this, the execution part. Now we're talking about how can I better execute this while still maintaining a full-time job, right? Because well, when I first learned about all this stuff, I was still working full time. So it was from there that I started to think, you know what? Like, I don't really need to understand or follow the news every single day and try to read up on what's the latest headline. I just need to uh, be able to better understand the actions that the major players are taking and monitor that. Well, how can I do that part? Well, I can run screens for the same kind of stocks that I'm looking for every single day. I can see what types of setups are showing up. And if I'm seeing high quality setups, right? Like, so if I'm walking into that Lamborghini dealer and I'm seeing that they're fully stocked, then that would be a good time to buy. Good environment, good time to buy. But if I walked into that same Lamborghini dealership and they're completely sold out, then there's nothing to buy, right? So just like if we're running the same screens, well, we know exactly what we're looking for, and there's nothing to buy, then there's no actions for us to take. There's no trades for us to take, and that's kind of like what it's been for me for most of this week. In fact, let me come over here and just look at my. I put on a trade for Elf. Oh, and look at that. Elf actually broke out the ticker ELF. Here's one that I was looking at just to show you guys. Oh, and you guys over here on uh, Twitter and StockTwits and all those other places. Let me show you this too. So that's ELF. You're just looking at me as I'm standing up over here, and I've got the other thing set up here. Let me share the screen for you guys on the other platforms over here. That's the one thing that makes this a little bit challenging with all this. So let's just briefly show you guys. So here's what I was looking at with ELF. Broke out, saw it setting up, and was one of the few high quality trades that I saw. So that's why I decided to take that one. But the idea is to wait for whatever your high quality setup is and then trade that. If you don't find any, then you don't take any trades. And then that's one of the best ways that you will be able to mitigate your risk. Because if you're only taking high quality trades, and high quality should mean that they over many trades, it gives you an edge. And that edge is going to help you make money over time. Well, if you don't find high quality trades, then the best thing to do with your money is to sit and wait for those high quality trades to show up. So a couple of questions come in over here on Instagram. If you guys on Twitter and Facebook and YouTube, if you guys have questions, just pop them over into the chat and we'll start answering some questions here. Let's see. Yeah, how much indicators are on my screen? So uh, I like to draw a lot on my charts, as you guys saw. So most of those are annotations. The only indicators that I use, or the only things that I'm looking at price and volume. Those are the primary things. I'm looking at a handful of moving averages. Uh, I'm looking at stochastics, and I'm looking at relative strength. That's basically basically it. Um, Let me see what else was on there. Yeah, the like a couple of minor things. So factoring in anchored VWAP, anchored volume weighted average price, and one other thing that I'm looking at is Fibonacci, Fibonacci extensions, Fibonacci retracements, and those are things that I'm using to look for extra layers of confluence. So if I'm seeing a whole bunch of things lining up at one particular point, then that's something that's going to give me a little bit more confidence in that level. Let's see, what other questions do we have? Just scrolling through here on Instagram. Yeah, I want you guys over there on YouTube and Facebook and LinkedIn and Twitter to get a little bit more active. We've got a lot of activity over here on Instagram. Don't be shy. Put in your questions into the chat. You'll be helping other people too. Yeah, here's a comment from uh, Shavar86. Back to basic supply and demand after lots of fancy strategies. And that's basically what it boils down to. And it's one of the reasons why we don't. I think that the news is noise, right? That's basically the conclusion that I ended up coming to, at least for how I was going to operate. So if I'm constantly trying to chase the latest headline story, and I might think that I'm in the know because, well, Deutsche is doing this, uh, and Powell came out and said that, and now I understand the story that's out there. Well, how is that going to affect the moves that I'm actually going to take in the market? From if I'm trading setups and I'm just looking for high quality setups and trading those setups and coming up with another way to measure the overall market environment, then it doesn't really matter. It's just an event. And all the big players, it might matter to them because they have to have a much longer term perspective than I do. They can't like if they put on a position, they can't take it off right away. Whereas you and I, we could put on a position, and if it doesn't work out, well, we could cut our loss and move on to the next thing. They can't do that. So from our perspective, our biggest advantage is that speed. We can put things on, ride a trend, and then exit, or we could put a trade on, and if it doesn't work out, we could get out the same day. That is a huge, huge advantage and one that we should be taking advantage of. Let's see what other questions have come in. Let's see here. How do you formulate a bias in the market when day trading? I don't like to look at it as bias, right? So it's more about assessing where the market is at. Like trying to figure out um, are Are there more setups going in a certain direction? Is the market moving in a certain direction? That you might think of that as a bias, but if I'm looking at markets through the lens of a bias, then to me that implies that I'm not seeing the other side. I always want to be open to the other side of the trade. So one of the things that I talk about in the book too, there's a point in here. I forget the chapter that it's in. It might be in the analysis chapter. It might come later on in the book. But I tell the story about how I had a ridiculous drawdown. Right, ridiculous drawdown. It was preposterous. I had a 97% drawdown in one of the accounts that I was using as a test account for basically like a playground to try to test out different strategies. And because there was barely any money in this account that I was just testing out with, say, I think it was started out with 3 grand. Didn't really care about that, so I just kept on testing away, and I drew down the account 97%, and it's just like, well, okay, I guess that test didn't work out. So, what I ended up doing, right? What I ended up doing was switching my strategy to a day trading strategy for that test account. And I started to day trade options while applying the same principles that I used for my swing trading. So basically taking everything that I do for swing trading and just condensing it down to a day trading strategy. And day trading options because of the additional leverage that I would get with the options. Well, I basically was able to turn $97 back into the initial 3 grand, and then a little bit beyond that in about 9 months. So that translated into I think at the time it was about a 3,000% return. I forget the exact amount, but then from there, I started to trade crypto, started swing trading crypto, and this was started to go back into 2019, 2020, and from there, that ended up ballooning too, and the account grew 14,500%. Yeah, the actual chart is in the book, but uh, the main idea is that um, when I was day trading, I didn't have a bias per se. Well, what I was looking for were stocks that had already broken out, that had formed the same kind of patterns that I was looking for swing trading, but to look for it on the lower time frames. When I looked for it on the lower time frames, then I was able to get in and only take the same high quality trades and watch them break out, take the gain, scale out on the way up, and allow that the last bit of them to run, and it worked out extremely well. Let's see. Well, what other questions do we have here? Um, Question about forex: is trading multiple pairs better than trading one pair? Uh, Let me take a sip of coffee, and I'll answer that. So, is trading multiple pairs better than one pair? It will depend on your system. So, for example, the system that I use for trading stocks is looking for specific setups in stocks that fit a certain criteria. So, if I'm looking for a specific setup, then it really doesn't matter the name. It matters if does it fit the criteria. So if your system for forex sounds kind of like that, where you're looking for a specific setup, then I would say that it, the pairs don't matter. You're looking more for the setup. But if you're trying to understand like how a certain pair behaves and you're going to have multiple setups, then that's a different story. So figure out, well, which camp you fall into, and that'll help you with that answer. Next question here: how to maintain risk and reward? That really starts out from the beginning of the trade. So, in the beginning of the trade, uh, before the trade ever gets placed, we should figure out where we're going to enter, where we're going to cut our loss, and have an idea of the target that we want to aim for. And when I think of targets, I'm not thinking about targets as like, oh, I'm going to only sell when price hits the target. The target is more of like a destination, right? Like just to tell me like, is this trade worth it or not, or should I pass and move on to the next trade? Once I'm in the trade, I'm going to start scaling out at certain points, and the certain points are going to be based on my uh, my performance. So because I journal and because I track my trades and I do post analysis, I know that my average gain tends to be about 10% per trade. So when I'm in a trade, I want to start scaling out of a trade when I hit 10%. I want to take half the gains off and have my stop to break even at that point. It's the average, it's the numbers. It has absolutely nothing to do with anything else. So I also want to allow the ability to have the rest of the trade run. So that's why I sell out in stages. Now, back to your original question, how to maintain risk and reward. It's about figuring out where you're going to enter, where your exit price is going to be, setting the target, and having all that set up within your personal performance, because we don't want to start picking out targets out of a hat. Right, like, so it would be very easy to say that, "Oh, I'm gonna, buy in a stock at, say, $10, and my target is 100." So, even if the price falls to a dollar, I'm looking at a 10 bagger here, right? That's not what we're trying to do. Well, we want our reward to risk, at least that part, to be based in reality, and that the way that we're going to figure that part out comes from our journaling practice, and all of that, of course, is mentioned in the Trading Mind Wheel book. Now, the Trading Mind Wheel book just published this book. It's available now uh, on Barnes and Noble, on Amazon, Target, Walmart, basically wherever books are sold. And we're also hosting a free Trading Mind Wheel virtual conference on April 4th. So you're going to want to come to that. For more information on the Trading Mind Wheel virtual conference, go to tradingmindwheel.com and sign up for that. What time is it? Oh, wow. Look at that. Time flies. It's almost 10 a.m. here in New York. Gonna wrap things up here. Thanks so much for watching. Hopefully, this brought you value. If it did, comment below. Let us know. And we're going to start something else new too. So we're going to start a mailbag for this show, for the Morning Coffee with Mike show. We're going to start a mailbag. And if you're on our newsletter, we're going to start asking questions of you guys, so that way you can submit your questions ahead of time, and we'll go through the mailbag and answer your questions. So if you're not already on the newsletter, get on the newsletter, ask us questions, and we'll answer them right here on the show for you guys. Have a great rest of your day. Have a great week, rest of your weekend. And make sure that you get the Trading Mind Wheel book and attend the conference. The conference is free. And I hope to see you there. Take care. Much love. Peace out, everybody.